What's going on, everybody? So today, Wednesday, December 20th, I figured I'd hop on here really quick and just do the quick recap. It is going to be very brief. I don't feel like being on here all night. But I just wanted to go over it. I got a few DMs about just a few simple questions that I think listening through audio will probably make a little more sense. I'm also going to share my screen here as well, just so you guys can see it. But just overall on today's end of day, obviously it was an epic meltdown, right? I was not a part of that. I got to be real honest with you. That was pretty intense, escalated rather quickly, and just one way around it, I guess you could say, and it goes back to what I tweeted this morning, and it was something that I've been saying for weeks on all of my live streams, all of my videos, and it's something that has helped me quite a bit, actually, in terms of fighting trend and all of that. But the thing that I said earlier this morning was I've been saying the same thing on every one of my live streams for the last 4 weeks. Until we see some sort of imbalance to the downside, there's no reason to be looking for any sort of substantial retracement. The range is not set yet, right? So, think about it. Over the last couple of weeks, since we took out higher time frame liquidity, which is right here at that 16,463, right after the completion of my model. So here's your price run, here's your retracement, and then completion of the model is a move up and through this level right here. Now, yes, it was a pretty exaggerated move and essentially erased everything that Monday and Tuesday brought, and even Wednesday morning. As we close below this week's new week open gap towards the end of the day. But is there a way to justify this? Is there a way to, I hate to say predict. Again, I was not involved in this, but looking back after the fact, were there some red flags along the way? We'll go back and we'll just take a quick look, and I'll justify my case as to why, maybe not as substantial of a move as we got, but there are some little key things that along the way that we can look for that will kind of give us justification for a move kind of like this. So first and foremost, of course, after taking out higher time frame liquidity, as always, to me, I like to wait for one imbalance to form in order for me to make my next decision. That's first and foremost right off the bat. Is it boring? Yeah. Is there waiting that comes along with that as a part of the process? Of course. And a lot of people don't want to hear that. Everybody wants to call the tops and bottoms, right? And to me, it's not very easy to do. After the fact, can you justify it? Of course, every move after the fact is easy to justify. But when it happens in the moment is obviously, how many people really caught this entirety of the move today? If you did, kudos, congrats, that's awesome. But I think more people than not were not a part of this, or if they were a part of it, they were in for a brief amount of time, right? So if we just take a look here right off the top of the bat, of course, here we have our weekly chart on NASDAQ, and I'm using NASDAQ. You can look at ES. It's going to be very similar in terms of this breakdown. But again, after taking out higher time frame liquidity, I know, and a lot of other people who study using these types of concepts would also understand that after taking out higher time frame liquidity, oftentimes that's where places of reversals are going to occur, right? I'm not saying that a reversal is going to happen from here, but typically if you were to go back on any chart, if you look back in time, you'll notice that more often than not, when there is a higher time frame high or low taken out, that typically leads to reversals, right? So as a result of that, of course, I'm looking at a weekly chart right now, but we're currently still with this large imbalance candle up from last week. If we are to close this weekly candle, so from Thursday and Friday, I know we got some high impact news coming over the next 2 days, but as long as we close above this 16,331, we're going to create a bullish weekly imbalance, okay? So until then, of course, from the weekly perspective, I'm just kind of chilling and waiting to see how this all shakes out. Now, and then you go into the daily, and this is where things can get a little bit tricky. Okay, so just right off the top of the bat, let's look into what happened today. Obviously, a disgusting candle after reaching into the high, which that high, can we justify the rejection from this point? Absolutely. This is a bearish imbalance, and this is what I was talking about earlier on in the day. Here's your bearish imbalance. Let me zoom in really quickly on that. There it is, from low of this candle to the high of this candle. In between, you're going to notice where I have this red rectangle, there are no wicks on either side. That would be be the textbook definition of what an imbalance in price is. So this entire range from 17,234 down to 16,939, that is a range of imbalance price activity. And in this case, it would be a sell side imbalance, down close candle, buy side inefficiency. So when price gets up into here, one, it can act as, especially on the first attempt, and this would be our first attempt up into this level, we would expect a rejection from here. Or if you're in a bullish trend looking for liquidity higher, oftentimes that's going to be a roadblock and just kind of slow down price action quite a bit. So to justify where this happened, yes, it makes sense. Of course, it sounds all easy and everything like that, but when you're in the moment, it's obviously not as easy. And that's, again, just a couple additional tools that you can use in order to kind of make your decisions. On top of that, we're looking at a weekly time frame. Trading off a weekly time frame, trading zero DTEs or scalping options don't really correlate all that well. So that is also a difficult aspect that comes into play there. But anyways, looking into today, or on the daily chart, I should say, after the large imbalance candle down that we had today, right? As long as tomorrow's candle, which is right here, we gapped up to open, but I'll get to that when I crunch it down into an even smaller time frame. But from the daily perspective, to me, what would ensure that we lock in this bearish imbalance, which at this exact moment, it's going to probably look different tomorrow, but this is what it looks like at this exact moment. So if market was to close today, right at this moment, this is what your bearish imbalance is going to look like. So for anybody who's watched any of my other videos on YouTube, when we do have a bullish trend, we are waiting for the range to set, aka my tweet from earlier this morning, right? We're waiting for a range to set after taking out higher time frame liquidity. We've done that. Now, range could it be set here? Yeah, as long as an imbalance forms, to me, the range is set, and that's when I would anticipate a retracement back down into one of these discount bullish imbalances. And then from there, I'd look to play it back up, right? So that's the caveat, of course. Look, do I anticipate tomorrow being a rip the top off 112 points back up to the high and close in this imbalance? Not necessarily. This created a bearish order block on the daily as well. And to me, that was what also led to, I guess, the avalanche in price and how it just continuously fell down. But here's where I tie it all in together. So how can we anticipate a move where it is just absolutely a puke fest? No support in sight. The thing just continues to melt down, right? So here it is. And to me, again, I wish I had stayed on top of this just a little bit more, but let's just take a look. So right now we're on the hourly time frame. And if we're looking at the hourly time frame here, you'll notice that obviously we had that huge, disgusting 2 o'clock candle from today. But what is one thing that we notice here in this entire run up, right? If we're looking at, just imbalances that were formed from earlier in the week, we really didn't have all that many, right? To me, price action on Monday and Tuesday were pretty bad, ultimately. Very choppy, very wicky. And it really wasn't the best conditions to be trading the indices, in my opinion. And that's why I kind of didn't do much trading on those at all this week. And I've been letting my higher time frame swings kind of play out because, those higher time frame trades are playing out as expected, while the smaller time frame is much more difficult to trade. And I'm actually kind of proud of myself because these past couple days in the past would have wiped me out. They would have been really harsh and probably would have lost a good chunk of money. So the fact that I stayed away, that's to me growth. And that's why I was talking to a couple of traders today in the group, and they were a little frustrated, and I kind of just laid it out for them in that it's like, look, you can't force it. That's first and foremost. And I know all these corny people on there say you can't force it, but why can you not force it? Like, what's the explanation from that? Well, if you trade using the concepts that I use, I need imbalances in price to define my entry, my exit, where I'm taking profits, right? Throughout the first 2 days of this week, you're going to notice that how many imbalances were formed. One, immediate wick right into it right here. Check that, right? Another one right here, immediate wick higher, and that's it. You have a bearish imbalance here, which means you need a bullish imbalance up and through. But really, throughout a week, you would expect much more to have taken place up to this point in the week, right? So the fact that we've only had two all week, that's kind of red flag number one. Also, if you're to look into them, there are no untouched imbalances on this run higher. For every imbalance that proved valid, bingo, bingo, right over here too. Where as you can see, price retraces back down into them and they take off. So both of these imbalances that were formed were filled or tested already. So the fact that we're melting down the way that we did, again, this was very accelerated and strong and harsh, but there really were no imbalances to catch it, right? So throughout this entirety time, if I go back here and look, I took one trade, and if I didn't go into it with the idea that I'm going to scalp this because this range is absolutely massive, I would have got smoked. I took the trade off of the new week open gap here. I just got to cut up that video and I'll send it out. But I took the scalp off of this point here up into this bearish imbalance, moved my stop aggressively, but I didn't take profit up in here, right? I wanted to see if we were going to run and at this point create some sort of range, get to 50%, lock in that range. And then from that point, I would be more interested in looking for lower at that point, right? Again, got up into this point. You'll see it in the video when I post it, but I drag my stop loss right up into here as we get stopped out. Great. I still ended up making like 750 bucks in just a short period of time off of that one bounce. And this really was the only level that I had at that point. Up until that point, everything had already been tested or already melted through. So yeah, that's just kind of the overarching theme on how I guess it got so out of hand. And again, it doesn't mean you have to agree with me on that. It's just my way of kind of trying to justify price in every move that we do end up making. I got two more things and then I'm donezo here. So before that, let's go over here, and if we just go through and we look through every name that we've been watching over the last 2 months, right? You're going to notice that a lot of these had already completed my model, which takes it, when it would complete, it takes out higher time frame liquidity. So when higher time frame liquidity is taken out, what was the first thing that I led off this entire call with? Oftentimes we can expect reversals, right? So if you take a look at Apple, look, we completed the model last week. Look what happened this week. Not only a gap down, but we make a strong move lower, right? So from this point, what would my range look like from here? I got to get rid of my old, but here was the initial range, low to high, discount retracement, new high, right? That's essentially my model. So from this point, I would have my low set there. Hold on, let me just move this. I want to move buy side liquidity to our new high, and I want to remove sell side liquidity down to our new low. This is unnecessary as well. So this is what it would look like on Apple. See, so if we were to get some sort of retracement from this point, Apple has quite a ways to go. A name that hasn't yet completed my model and has actually been lagging for quite some time is Tesla, and it's one that I do actually anticipate making the move up to the swing high to complete my model here shortly. But there it is. That's what I have on Tesla. So here, and again, even after today's ugly PA, nothing has changed for me. Really, at this point, I initially had entered down here. So where I'm looking really to say, okay, enough is enough, is just below this imbalance here, which again, I don't really anticipate that happening. But again, we can continue looking through. NVIDIA has already completed my model. So taking that higher time frame liquidity, oftentimes that will create reversal or pullback from that point, right? Netflix as well. Here's one that actually didn't get beat up as bad as a lot of these other names did today. But here's Netflix. Come on, load up here. Amazon also completed the model. Microsoft completed the model. Google is yet to finish. I would have to see what the high on Google was today. I wasn't checking in on it. But here's your higher time frame high on Netflix that was taken out with this weekly candle here. Now, again, we swept higher time frame liquidity. One of two things. I need to see some sort of imbalance form, whether it's up or down, for me to feel good about any direction from that point. AMD was another one that completed my model, took out buy side liquidity, and now waiting for some sort of imbalance to form on whatever time frame it is that I'm looking at right now. It's the weekly. So, but here, let me just check Google, because out of all these names, there's a lot of them. Oh, Google did it. Yep, Google did it today. So there it is, your higher time frame sweep. Bingo right there. That was the number we're looking for, 141.22. Swept that high and just retraced to close out the day. But so a lot of these names have taken out that higher time frame swing high or buy side liquidity, and with that, typically that will be a good spot to set some sort of range, right? So just outlook, if we look at this in a smaller time frame here, don't love how we didn't sweep this hourly low here at 16,756.75 on NASDAQ. Would have liked for that to happen. Then I would have felt pretty good about this retracement. But regardless, if this is the low, why would I, do I know this is the low for damn sure? Not necessarily, but one way that I can kind of justify it being the low is here's your first bullish imbalance and the respect for it as well. So this is obviously after hours candles, but here is a bullish imbalance right here. There is your retracement back into it, and then you take off from there. We have the new week open gap, which is going to act as a resistance level in this situation now that we are currently below weekly open. But because of that huge move down, right? Even, I'm going to turn this to a 15-minute so it just looks a little bit more clear, but nothing changes here in terms of what my range is. So from high, why is this my high that I use? What was the price run that took out these lows here? From high to low. Now I would anticipate a retracement back to 50% at the very minimum and look left for a bearish imbalance. We have this large one right here, and we also have this large one right here. Now, that in turn would not allow price to get back up to that level that we spoke on earlier over here on NASDAQ, which is yesterday's low. And I'm going to pull it up right now for you. Yesterday's low. Oh, I need a daily. Whoops. So again, remember, if we were to come back up to 16,910, which again, where is our 15-minute chart? So if we were to come back up to here, that prevents us from forming a weekly bearish or a daily bearish imbalance, right? To me, I don't think it's out of the realm of possibility with GDP in the morning as well. That's a high impact data driver. So not totally out of the range of possibilities, but again, could this be the low? Yes. Could it not be the low? Very possible. I would have loved for it just to go down one more tick, sweep that low, and then from there I would have felt pretty good about it retracing back up to 50%. But what else was there? I think there's one more thing that I wanted to bring up. I think that might be it. Yeah. So I look, ultimately, we need a range setter at some point. The imbalance up through there is pretty convincing. The fact that 50%, and that's typically an area where I look for price to retrace towards prior to, in this situation, I would be looking for a short. But the way that I always look at these trades is, look, if I wait to get my imbalance up in this area here, that's my trade parameters, right? 960 to 709. That's a pretty big range. I'd probably look to go off 50% of that or the consequential encroachment. So it's about 14 or 24 points. No, 14 points. Sorry. That would be, I guess, my idea for the trade. But again, the way that I look at it is it's either the best short in terms of the range or the quickest stop out that I'm going to take. And if that's the case, then we reverse. And at that point, then I think we move higher. So that's kind of just ultimately like what I'm, I guess, looking for. Hi, Kel, I just saw. Fatih, hey, bro. From what I understanding is if we don't get another 500 drop on NASDAQ till Friday, our max pullback can be around 500 points as we create another weekly imbalance. We're going to create, it looks like we're going to create another weekly imbalance here, yeah. Also, isn't it very possible that price needs to get back to a weekly bullish imbalance before going higher as we dropped off the sea of the bearish fair value gap on the weekly? Yeah, totally. So what Fatih was saying was the fact that we rejected off of this weekly bearish imbalance, specifically right off that 50%, you can anticipate a retracement back down into it, right? So that's still a pretty large range. So the way that I'm looking at it is, and I'm not all that sure. I mean, really, the only one that is lagging in my opinion right now is Tesla at this point. It's the last one to do it. So while the other names start to cool off a little bit, could Tesla be the one to drive it? Potentially. I don't anticipate, I've been saying this for a few weeks now. I just didn't think time was on our side in terms of getting to that all-time high prior to the end of the year. So, to me, the way that I'm looking at this again is just, if we can get this bearish imbalance to form on the daily time frame, I will feel pretty good about us retracing back down into discount of this range. Until some sort of bearish imbalance forms, I don't feel all that good about anything short. And you might say, oh, well, what if you miss this big move? Oftentimes you're going to notice that price will retrace back down into some sort of imbalance prior to getting back up into that imbalance that we initially rejected. So I think that's all I got. So 20 minutes on the dot. I wanted to do it quick, and this way it loads right up to YouTube and on X. So all right, well, thanks for everybody for joining up here. I hope that made sense. And if you have any questions, feel free to reach out. So I'll talk to you all later.